The US dollar is lower versus three major currency pairs: euro versus US dollar, dollar versus yen, and sterling versus US dollar ahead of the US jobs report. That will be released at 8:30 a.m. Let's go through what we're expected for that, and also the technicals that are driving these currency pairs to and through that report. So let's get started. The expectations are for a gain of 130,000 for non-farm payroll. We also expect the unemployment rate to remain unchanged at 4.2% and the average hourly earnings to rise by 0.3%. Those are the expectations. The market's going to be digging into the details of that report, see if there's any weakness. We did see the U.S. initial jobs claims tick up yesterday in a surprise move. Is that a precursor for some weakness in this U.S. jobs report? We will see, but let's take a look at the euro versus U.S. dollar. The dollar, as mentioned, is moving high, actually lower in the trading here to start off the new trading day after moving higher yesterday. Looking at the euro versus U.S. dollar, we fell below that red line right through here, which was the midpoint of some key technical levels off of the daily chart. If I go to the daily chart and take a look at the high price going back to this point right here, it came in at 1.12754. If I take a look at the 61.8% retracement of this move down here from the 2020 high to the 2022 low, we broke above that, and we have been able to stay above that, but we moved a little bit below it yesterday. At one point, that comes at 1.12709. Going back to our hourly chart, you can see that the price fell below those areas, the area to a low of 1.1265, just about 5 or 6 pips below the low of that swing area. But see this little low right here? We couldn't get below that level. It was right on that level. As a matter of fact, it couldn't also get below the 38.2% retracement. Unfortunately, these levels are also key levels. I thought that if we broke through that level, we'd see further momentum in the downward direction. What instead happened was that we came back above it, and we started to use that level as support, not only here, but also in the early Asian session. And once we found support in the Asian session and couldn't get below that level right through here, we started to see a tick up to the upside, and then the sellers turned to buyers, and we pushed the price back higher. And where we go? Well, we went back to a neutral area, and this neutral area is where the 100 and 200-hour moving averages are. The 100-hour moving average comes in at 1.13515. The 200-hour moving average comes in at 1.1366. And the market's saying, okay, non-farm payroll, tell us which way to go. Which way are we going to break? Are we going to break to the upside? Are we going to break to the downside? Unfortunately, that's what the decision tree is going to be, and we'll see how that plays out. But if we move above the 113.66 level, we'll start to look toward our high prices for the week, and which come in through here. We'll also look for perhaps this lower high right here, which was a corrective high from last week's trading, which came up to the 100-hour moving average, found willing sellers at the time. 114.39 is where that level is, and then we'll look toward this level up here before we start to look toward the extreme that we saw in the euro versus US dollar in the month of April. That came in at 115.72 on the downside. We move back to the downside and below. Let's say this area right through here would be, or this level right through here, which was the double bottom from last week's trading at 113.07. I think I could see further selling pressure and a rotation back down toward, again, that 113.71 to 75 level, 38.2% retracement at 1.12505. Those are the key levels in the euro versus US dollar. We're in a neutral area, right, just below the 100-hour moving average, or toward that neutral area. Really, the neutral area is between the 100 and 200-hour moving average. So let's take a look at the dollar versus yen next. And as you can see, this currency pair moved up, and we stretched above the 50% retracement in trading yesterday, and we also stretched higher in trading here today. But you see this green line right here. This green line represents a 200-bar moving average on the 4-hour chart. We found willing sellers against that level, that target on the top side, fell back below the 50% retracement level, and buyers turned to sellers, and we started to push back down toward this swing area down here between 144.45 and 144, looks like 56. And then below that level, we're going to have the 38.2% retracement, which did a pretty decent job of trying to hold support yesterday. We did move above it with momentum here, and then came back down toward it. Found a little sellers below that level. The market was testing, couldn't get any more momentum going to the downside, and then moved to the upside. So this level is going to be a level of interest for traders on the downside. with a weaker, if yields start to go down, a weaker jobs data, presumably. 144.21 is that level. Get below that level, opens the door for the downside, find support against that level, and we could see a rotation back toward the 50% retracement level, toward our 200 bar moving average, which did such a nice job of holding resistance. Move below this level, and we start to look toward our moving average, our hourly moving averages down through here, which are starting to move up, so they become an easier hurdles at 143.38, 143.97. Finally, let's take a look at the sterling versus US dollar, and this currency pair moved lower in trading yesterday after testing the 200-hour moving average here, so we stayed below that level. That gave the sellers a go-ahead to push to the downside, and we did just that. We moved below this low right here. We moved below this low right here from earlier in the day, but we could not sustain the momentum down toward things like this low right through here, these lows through here, and we started to see a rotation back to the upside using let's say this low right here as a support before moving higher. We are below the 100 and 200-hour moving averages up here. These are going to be barometers to get to and through on the top side to increase bullish bias. They come in at 1.3331 and 1.3353. If we get above those levels, we're starting to get into the extreme on the top side, which we saw form an extreme up here at one point in the month of April, and then another extreme up here at another point where we extended to new highs. But kind of kept the same low of the red box through here. So getting above this into these red boxes would be more bullish for the pair on the on further dollar selling. A move above the 100 and 200-hour moving average. On the downside, we have these other levels down through here, including what is a key level for me is this level right through here. This level is defined by this swing high right here, swing high right here, swing high right here. You can see the ceiling, and then the ceiling became a floor right through here, and that level is going to be a key support level on the downside and further selling pressure, 132.01. So there you have it. Look at three major currency pairs. Good fortune with your trading through this non-farm payroll. More risk involved. My name is Greg Mikulowski. Good fortune. Bye-bye now.